The broadcast is now starting. All attendees are in listen-only mode.
Hello, and welcome to today's webinar. I'm Nick Zulovich, part of the team at Cherokee Media Group and senior editor of AutoFin Journal and Subprime Auto Finance News. In today's webinar, navigating the compliance and due diligence front, practical strategies to put an aftermarket plan in place, we're going to learn more from Sergio Moreira and Peter Kroll from Allied Solutions. But before we get started, I want to go over a few housekeeping items for today's webinar. Please make sure you've dialed in using the phone number provided in your communication email, or you're able to listen via your PC speakers. We are recording today's webinar, and we'll make the recording available to you as soon as possible. You will be in listen-only mode for this webinar, but we will reserve some time after the presentation for a Q&A session. You can submit your questions at any time through the questions box on the GoToWebinar control panel. And if we aren't able to get to your question today, don't worry, because we'll forward it to the team at Allied Solutions so they can respond back to you directly via email. And lastly, if you have any difficulties during the webinar, please click on the hand icon to alert a member of our team. So with plenty of knowledge and recommendations to share, let's get right to Sergio and Peter for our webinar. Gentlemen, take it away.
Thank you, Nick, and thank you all for taking the time to join today's webinar. We're very excited to be able to speak to you regarding aftermarket products and how you can enhance your operations. Aftermarket products, as we know, is a big business. There are 40 million plus products sold annually, and 25% of those being canceled before term ends. And with the increase from pressuring from governing bodies such as the CFPB and the OCC, the complex task of canceling these products has become cumbersome for some lenders. As you can see, in today's agenda, we will cover market conditions, discuss compliance and oversight, and finally, give you some strategy tactics to take back to your shop. However, before we do that, I wanted to share some fast facts about Allied Solutions. Are you aware we have 40 plus years of experience in the industry? Monitor 20 million loans. On an annual basis, we send out 5.5 million consumer notices, handle 1.8 million outbound and 1.9 million inbound calls annually, process 40,000 claims with lost payments, and finally, successfully secured 100 million in recoveries over the last 5 years for our clients. With those impressive numbers out of the way, I'll turn it over to our market expert, Peter Kroll, as he discusses some of the market conditions. Take it away, Peter.
Thanks so much, Sergio. Appreciate everybody's time today. As we know in the market conditions in 2019 and going forward, the sale of ancillary optional products along with new and used car sales continues to rise. The market has seen a lot of acceleration relative to these products, as Sergio mentioned, and with more cars being on the road and F&I products continuing to be a driving force in the overall dealer profits, the handling of these products on the back end is extremely critical. As we see here on the slides, most dealers did see an increase of about 10% in 2018, with the continued acceleration of these products being bundled and creatively sold to consumers. 90% of the products, over 90, are actually sold to the consumers, are funded by a lender and paid for over the term of the loan. This leads to increasing costs in terms of the consumers to buy additional protection. As aforementioned by my great colleague Sergio, millions of these products are sold annually. In this growing industry segment, consistent with 5 to 10% annual growth year over year, we're going to continue to see that increased regulatory scrutiny and compliance. Sergio did mention both the OCC, the CFPB, and then also on individual state levels as well. So what kind of opportunities lie ahead in the marketplace with some of these compelling numbers? Obviously, an increasing need for product cancellation systems such as F&I in the F&I industry. That segment continues to grow and continues, the market costs continue to go up. The products are not necessarily becoming cheaper. Current regulatory guidelines do put pressure on the lender to process the refunds within a specified period of time. Again, this varies by state. 30 to 60 days is an average. And then you have the existing need for an audited solution beyond the simple automation that provides an efficient cancellation process. And incumbent within that stream, you have the RIC, the retail installment contract, the product contracts themselves specifying terms and conditions, the triggering event, the all-important triggering event, which we will touch on later, but simply is defined for purposes of this presentation as a repossession, a total loss, a refi, or an early payoff, something that changes that retail installment contract when a customer has one of these events. Another key piece, particularly for the VSCs, vehicle service contracts, is also the last reported mileage. And as we kind of continue the theme of what kind of opportunities as lenders look at this landscape and some of the changing rules and regulations, what are these opportunities ahead? We like to refer to it as that product refund liability. And it is the financial liability owed by the lender / dealer, we'll put them both together there, to the consumer for the refundable portion of a service contract or product coverage purchased at the time of the auto loan due to some of the early termination triggering events that we had outlined on the previous slide. This liability is created by key events associated with terminating the loan. And again, we're referring to these for the purposes of our presentation today as triggering events. Some of the product examples within the F&I office that we've seen, but we wanted to just make mention of specifically include GAP, the Guaranteed Asset Protection, credit, life, and disability. I think we did mention the vehicle services, vehicle service contracts. Also incumbent within that, there's prepaid maintenance, there's tire, there's oil changes. A lot of different types of products go into this bucket. Again, we highlighted it, but want to stress too, the triggering loan events that prompt action on behalf of the lender include the total loss, the repossession, the early loan payoff, and trade-ins. And as we went out and started to talk to the people that we work with, our clients, our prospects, the marketplace, we did really want to understand what some of the pain points were and how we could best solve for them in light of the changing regulatory environment. So Allied Solutions, we reached out to the industry to learn about the solutions lenders are currently seeking or utilizing today. We wanted to understand the need for product refund liability and the challenges facing the market and those lenders today. And with all of these changing regulatory factors, we find that it's becoming increasingly important to find an audited, compliant option for lenders. And so when we reached out to everybody, just there on the right-hand side of the slide, we've talked to trade associations, we've talked to credit unions, auto finance companies, bank holding companies, and captives in order to really get a broad swath across the entire industry of folks doing auto lending to understand what their pain points were and different ways we can help them understand the changing environment. With that, I'd like to turn it back over to Sergio to talk a little bit about the compliance and oversight, recognizing the lenders and the issues we talked about, who we talked about in the industry, and what are some of the things on the landscape to look for.
Thanks, Peter. We appreciate the market conditions and the opportunities that lenders are facing when it comes to aftermarket products. Moving on to compliance and oversight, there are 4 areas of concerns for lenders that they need to really evaluate and take a look when it comes to refundable products, as they are listed below. However, we all know with the tremendous scrutiny that is coming from regulators when it comes to unfair and deceptive practices, This scrutiny comes, as Peter mentioned, not only at the federal level, but at the state level as well. The increased scrutiny and strain that this has created on lenders in order to be able to process these requests for rebates on ancillary products has really, as I mentioned, put a strain on lenders in order to be able to handle the process, as many lenders today don't have an infrastructure or a process in place to be able to effectuate the cancellation requests. The 4 areas of concern, as I mentioned, which obviously by putting a proper aftermarket plan in place, you are not only you're protecting your reputation, but you're protecting your profitability and you're protecting your consumers. And of course, we're keeping the regulators happy. We're complying with those regulations. As we move on to the next slide, as we all know today, currently there are 46 states that have some sort of regulation in place regarding ancillary products and rebates. This number before used to be less, and we obviously know that this number is going to continue to grow. The most notable states that currently have a process in place or that are receiving scrutiny are Alabama, Colorado, Massachusetts, and Texas. Obviously, there are a variety of different states that have other certain regulations, but these have been the major ones that have had closer attention from governing bodies. Some of the regulations in place, they mandate who is responsible for ensuring that the refund is made and when the consumer is actually to receive that refund. So what they've stated is that based on the current regulations, obviously we want to look at getting the consumer, making the consumer whole and making sure that they receive it in a timely manner. Depending on the states, there's certain regulations that require them to either have a 30-day or 60-day notice. It's important to always pay attention to what is occurring in the marketplace and the regulations that are being released. But however, some of the industry challenges that we're noticing when it comes to aftermarket product, which I'm sure many of you are very familiar with or have come across some of these. First and foremost is consumers aren't receiving a refund at all. Or if they are, they're not receiving the correct amount and or are not receiving it in a timely manner, which is a big no-no or a major issue currently in the market. And then in turn, since they're not getting a proper refund or they're not receiving it in a timely manner, it's causing lenders to incorrectly report deficiency balances to the Bureau. And then also the volume that lenders are currently having to process has become a burden and a strain because we'll talk about it in the next slide, but the cancellation process is very complex and cumbersome. And then some of the other industry challenges that we've noted are dealers are dissatisfied due to correct invoicing, and then obviously reserve chargebacks. And then there's also a dim view of lenders who don't take a proactive approach to when it comes to refunds. As we move on to the refund process itself, as I mentioned, this is a very complex process in itself. I'm sure everybody is very familiar as to how it works, but I'll kind of walk you through some of the steps and some of the scenarios. As Peter mentioned, typically a cancellation request is generated or created by a triggering event, such as a early payoff, a total loss, a repossession, or a trade-in. With this event occurring, the cancellation request is usually typically received by the dealer. And as much as we may love our dealers, and we understand that obviously this is a profitable business for them, they tend to sit back or wait, or sometimes not have the proper process in place to be able to handle the cancellation request that's coming in. So that the submission of this request or the cancellation being submitted to the provider is being delayed. Once the actual request or the submission has been sent to the provider themselves would then effectuate or adjudicate the request and determine what is refundable. So they would determine the portion that's going to go back to the dealer, Once the dealer receives that portion, they add the dealer piece or their cut of it, of the deal. After the dealer has processed that, it goes back to the lender. And once the lender has actually received it, ultimately it's going to make it back to the consumer. This complex process is very lengthy, making it very hard for lenders to be able to process these and stay compliant, and obviously being able to fulfill these needs or these requirements in a timely manner. We know that many situations there are breaks in the process or there's failure. So it's important for lenders to understand that they need to be able to keep up with not only with the regulations in place, but understand the process and look at ways to be able to create a more strategic or more efficient way to be able to make consumers whole. Moving on to the next slides, we wanted to be able to provide you some strategy tactics to be able to just to think about and possibly look at how you can implement some of these into your shop. The first tactic is you obviously want to determine accuracy. And why is accuracy so important? Well, like I said throughout the webinar or this presentation, lenders are facing that pressure from regulators, and not only that, but also the consumers when it comes to these rebatable products. Consumers want to be made whole, and regulators want to make sure that the consumer is made whole. The CFPB actually issues out supervisory highlights, and one of the highlights was actually around this subject, the accuracy of the refund that's going back to the consumer. They've mentioned how specifically miscalculation caused borrowers to not receive the right amount, which in turn created a deficiency balance and resulted in them going into collection, which they shouldn't have in the first place. So in order to avoid some of these issues, we came up with some strategy tactics. The first one is you may want to consider moving to electronic processing to improve your efficiency and to create a better process. You also want to review your origination process to ensure the information that's being provided is verified and accurate, and then also have quality in place and determine audit points, and then build a consistent, accurate, and transparent documented process for the cancellation request and or claim filing. As we move on to strategy tactic number 2, which is reevaluate timeliness. Why is timeliness important? Well, as I mentioned in a previous slide, regulators are actually looking at the current cycle time that's in place for refunds. It's not very practical, and we know that the regulators are looking at ways to be able to reduce that current timeline. So some of the tips for you in order to improve your timeliness is to make sure that you're all up to date on your regulations so that you understand each state and understand at what time in the process you need to make sure that the consumer receives their refund. You want to also ensure that you document all service timeliness for each one of those triggering events that we mentioned. And then also determine communication strategy for the product refunds. And then create an updated process for acknowledgement, and also making sure you have audit processes in place to make sure that the consumer receives those refunds in a timely manner. Moving on to tactic number 3, or strategy number 3, is to streamline the process. As we know, and as I mentioned, the cancellation process is complex and can be very manual. So we want to make sure that you have different places in your process that you can review and ensure that there are no bottlenecks or that there are no delays in your actual process. Some of the tips for you are to review how the information is currently being processed. And as mentioned in the first strategy, consider moving to electronic form. Electronic forms can be easily stored and shared among all parties. You also want to evaluate where the data is being lost, and also, as I mentioned, where bottlenecks are happening. And a big thing is to make sure you document everything. You want to make sure all the steps are constructive and transparent so that everybody that has a hand in that process understands it. And finally, moving on to tactic number 4, collaborate with providers and industry leaders. The regulation changes don't just impact lenders. We're all in this together, and we want to make sure that we engage all stakeholders so that we're bridging that gap. We need to introduce transparency into the market and ensure that we're all doing the right thing for the consumer. At the end of the day, we need to make sure that we are reviewing all stakeholder obligations and how collaboration can help engage with regulators. Of course, ask questions about the process and communicate strategies. And as I mentioned, you want to identify providers that are willing to assist you in this process to help you improve it and make it more efficient. And also collaborate with industry leaders. We're all here in this together, and we all want to make sure that we're improving this process for the consumers. I know there's been a lot of information already provided to you in today's session, and our hope is that you at least walk away with these 4 strategies or these 4 takeaways. First one is make sure that you understand how changing compliance regulations impact your business. Assess the current aftermarket policies that you currently have in your process, and then implement documentation, and then take advantage of product providers and industry leaders in the market. And if you enjoyed today's session, please make sure that you attend Allied Solutions SVP of Claim and Recovery, Ann Holtzman, as she dives deeper into developing compliant product refund strategies during Used Car Week. I want to thank you for your time, and I look forward to your questions. Back to you, Nick.
Great information from both Sergio Moreira and Peter Krall from Allied Solutions for today's webinar, Navigating the Compliance and Due Diligence Front, Practical Strategies to Put an Aftermarket Plan in Place. And if you have a question for our experts today, please use the questions box on the GoToWebinar control panel to submit your question. And just a reminder that we are recording today's session, so please keep watch of your inbox for a link to the recording of today's session so you can review the great information and strategy recommendations that Sergio and Peter have shared already today. And gentlemen, to get our conversation started, perhaps it's revisiting a bit some of what you shared during the presentation. But again, what are the top concerns that lenders and finance companies should be worried about when it comes to this particular part of their business? What should be certainly on their radar?
Yes, definitely. That's a great question, Nick. The biggest thing is the ever-changing regulations that are being obviously implemented and being released. As I mentioned, every state in itself has different pieces or different parts of the actual process that regulators really look at. So it's important for lenders to not only to stay up to date, but to make sure that they're reviewing it and applying those regulation changes to their current process to ensure obviously that, we're keeping the consumers happy, we're ensuring that they're receiving the refunds in a timely manner, and ultimately that they're being made whole and that we're not going after any deficiency balances that are not correct.
Very good. And as a follow-up to that, Sergio, you mentioned during the presentation and your comments just now about regulations and certainly on a federal level, you referenced the CFPB, the OCC, certainly an alphabet soup of regulators at the federal level. But how can finance companies keep up with what's happening at the state level? Where should they direct their attention, especially if they operate nationwide or regionally in a collection of different states? Where might you suggest pointing them toward to to keep up with those states' regulations?
Another great question, Nick. There are a variety of different resources and tools available. As I kind of mentioned earlier in the webinar, in the session, the CFPB, they do issue a lot of supervisory highlights, and there are a lot of other industry experts and leaders that are available out in the marketplace for lenders to be able to kind of just connect and be able to strategize and keep up to date with a lot of these different regulations in place. As we know, 46 states currently have some sort of regulation in place. We know that number is ever changing, and we know it's going to continue to increase. But there are a variety of different resources out there available to lenders. And as I mentioned, we're all in this together. We can help each other out and connect with each other and just keep up to date with a lot of those regulations or a lot of those changes.
Our experts for today's webinar are Sergio Moreira and Peter Kroll from Allied Solutions for our session today, navigating the compliance and due diligence front, practical strategies to put an aftermarket plan in place. And if you have questions for our experts from Allied Solutions, please use the questions box on the GoTo webinar control panel, and we'll try to get to as many as we can during our allotted time today. And gentlemen, we are beginning the fourth quarter of 2019 already. Time is going quickly, and 2020 will be here before we know it. But each of you gentlemen, just whatever you'd care to share, just what's your outlook for 2020? Just what's on your dashboard to keep track of as we close 2019 and go into 2020?
Peter, you want to take that?
Sure. Yeah, thanks, Sergio. Great question, Nick. I think it's obvious to state, but to reinstate, these regulations aren't going to be going away anytime soon. They're not going to lessen anytime soon. As we look ahead to 2020, it's absolutely imperative to ensure, as Sergio said, that your consumers are made whole under your governing law. A lot of different sources of information on this, and at times you'll even find that sometimes the laws are not abundantly clear as products are newly introduced and become more creative. The follow-up that Sergio had referenced to your dealer groups that you work with to ensure that that consumer has been made whole beyond just saying, well, we processed it and gave the information to our dealer, is something that's going to continue to be looked at. So as we look ahead to 2020, just really ensure, as you look at your processes, that follow-up to the end consumer and making them whole is top of mind. Thanks, Sergio.
Very good. That's Peter Kroll and Sergio Moreira from Allied Solutions for our webinar today, navigating the compliance and due diligence front, practical strategies to put an aftermarket plan in place. And gentlemen, to round out our time today for our webinar, and just a reminder that we are recording this session, so please keep watch of your inbox for a link to that recording so you can review the great information and strategy recommendations that have been shared, as well as distributed around your shop to help craft a plan that works for your particular operation. And it appears that what's top of mind for the finance companies who have joined us, gentlemen, is total loss claims. We're certainly in the latter stages of hurricane season that often triggers a lot of damages and total losses, as well as those crashes at the grocery store sometimes that we might see. Just if you could just revisit a bit the total loss scenario and how intricate those particular situations can be, and again, just touching on any best practices to round us out with that particular area.
Sure, not a problem, Nick. So as far as, or as it comes to a total loss, as we know, typically when the insurance carriers send out their evaluation or they determine what the settlement's going to be, you work with them to negotiate the best possible total loss settlement for the consumer, for the borrower. As part of that, when it comes to the actual aftermarket products, you want to ensure, obviously, that you are not canceling any products that are going to be used for that total loss. So, for example, you're not going to want to cancel your gap. The consumer, the borrower may want to use the gap to pay out any deficiencies that obviously that the primary insurance company didn't cover. So that's something that you need to pay close attention and ensuring that the products that are going to be used or the policies that are being used aren't canceled. However, obviously you're going to look at other rebatable contracts such as your vehicle service contracts, tire and wheel, mechanical breakdown. Some of those contracts obviously are rebatable. You want to take a look at those and cancel those policies or those products to ensure that whatever is being refunded or rebated back to the consumer is being applied back towards that any deficiency balances. And obviously, in general, you're making, as we said, you're making the consumer whole throughout the whole process.
Very good. Again, that's the voices of Sergio Moreira and Peter Kroll from Allied Solutions for our webinar today, Navigating the Compliance and Due Diligence Front, Practical Strategies to Put an Aftermarket Plan in Place. And certainly a lot of great information has been shared today, and Allied Solutions has many more strategy recommendations and other materials available on their website. If you just go to alliedsolutions.net/resources, the website that's there on your screen, more information and best practices are available there to you. And also, the contact information for Sergio Moreira is there on the screen, sergio.moreira@alliedsolutions.net. Can reach out to him directly if you have any questions or concerns about what's happening at your shop. And certainly Allied Solutions is online as well as on Facebook, LinkedIn, and Twitter. You can follow the company through all of those social media platforms as well. So we thank you again for joining us, and we thank Sergio Moreira and Peter Kroll from Allied Solutions for today's webinar. For all of us at Cherokee Media Group, we thank you for joining us, and we look forward to having you again next time.